Good afternoon from sunny Istanbul, dear YouTubers. This is your loving presenter, Atilla Yeşilada, presenting another broadcast for Real Turkey channel. It's a beautiful day, but unfortunately I won't be able to go beyond our pool simply because I am too old and the COVID-19 virus is raging, not only in Istanbul, but throughout Turkey. But don't worry about it. I'm not going to talk about the virus and the outbreak at length today. In fact, I have even worse news for you. When I started this project, I was hoping that I would explain the truth about Turkey and introduce this lovely country to the English audience, English-speaking audience of the YouTube. Unfortunately, the project coincided with an extremely bad time for Turkish economy and of course the COVID outbreak. Therefore, most of my videos are really not very inspiring. In fact, they are in the nature of horror movies. And today I am presenting another episode in Freddy's Nightmares. It's called Turkey's Winter of Stagflation. I have decided, because of my advancing age and onsetting dementia, not to mention other psychological problems, to bullet the points I'm going to make. First of all, I want to talk about how the economy is going to do this year, then why it is going to get worse rather than better. Turkey's unique inflation problem, I think with the exception of those countries that are ravaged by war, or civil strife, Turkey is the only emerging nation with double-digit inflation. This is where we are, and it's going to get unfortunately worse because, as I mentioned during the intro, that the COVID-19 virus is getting out of hand. Turkey is running out of FX reserves, and since we are a credit-dependent country, without a heavy inflow of new credit or hot money, it's almost impossible to introduce growth into the Turkish economy. Okay, Turkish economy shrank in real terms, and I'm rounding up the numbers because numbers are not that important. You know, it's the point. The point is to get the picture here, and in the absence of a lot of graphics, I'm trying to get the point to you rather than the numbers. But in the second quarter, Turkish GDP declined by 10% year on year, as well as quarter on quarter. Coincidence would have it. In the third quarter, of course, as the epidemic-related shutdowns and lockdowns have ended, we have seen rapid normalization, which has reflected to the economic activity. And in fact, the Turkish economy recovered relatively sharply through August. But a very important point needs to be made. You know, I watch United States, EU, and some of the emerging markets. During the epidemic, the governments have provided massive amounts of financial aid to poor households, to unemployed, as well as to small and medium-sized business establishments. Turkey has taken a shortcut. There has been some amount of financial aid in terms of additional unemployment benefits, etc., to the newly unemployed, but most of the stimulus, the aid package, came in terms of loans. In other words, the state didn't grant you anything. The state put you in debt. Let me show you just how rapidly Turkey's credit to GDP ratio rose. Look at the hook-sized shape at the right end of the graphic. You would see since the epidemic has started, Turkish loans to GDP ratio shot through the roof. And of course, the problem with that kind of approach is twofold. A, you can't sustain it forever because credit is fungible. And it leaks to all sorts of markets, such as the currency markets, as a result of which Turkish lira depreciated something like 20% against the dollar year to date. I think it's the second or third worst performing currency among emerging markets. Two, as I've said, people are heavily indebted. A lot of them bet on a good summer season, which would bring back the tourists and economic activity so they can pay back their debts. But that didn't pan out. The recovery wasn't that strong. From now on, it's going to get downhill simply because the government has initiated new measures to curtail credit growth. And our central bank has, in an indirect and roundabout way, raised its policy rates by 300 basis points, which of course will be reflected to deposit and to loan rates. So, people will save more and will take out less loans. Now, if you believe the Erdogan administration, the economy is staging a V-shaped recovery, which will last into the fourth quarter. And in 2021, Turkey will just, soar through the stratosphere with 5% real GDP growth and ever falling inflation. Now I'm going to prove to you that this is just not going to happen. I mean, all governments lie, but ours have become an expert in it. Our first scene here, I am sorry. Now what I'm doing is I'm showing you the details of August economic data to provide evidence that the Turkish economy has already lost severe amounts of momentum in August. These are what we call sectoral confidence indices. They are similar to sectoral PMIs published across the world. Turkish Stats Agency divides the economy into three segments: service, retail, and construction. It doesn't matter which one is which. These are the sub-indices within the sectoral indices. You will see that looking forward, Turkish businesses see less hope or express less confidence that business volumes would improve in the coming months. And of course, if people are not very optimistic about their future, they would reduce their inventories, they will not add to their staff, they will not undertake capital expenditures, and in some sense, the loss of confidence becomes a self-fulfilling prophecy. Let's move on to our next scene. I am really sorry, I'm still learning this program. This is our domestic, very unique purchasing managers index. It's called PUMAX. And it has the advantage of covering both manufacturing and services. As you will see, in August, it staged a sharp decline. It is still in the expansion phase, so the value is above 50, which means manufacturing and services industries continue to grow in August, but after the V-shaped recovery, suddenly the first derivative of growth has declined very sharply in August. So we should ask ourselves, we should ask ourselves, is there any possibility that things will get better in September? That's really hard to believe. For one reason, inflation is going through the roof. Let me show you our inflation picture. This is again something we produced. It looks at a variety of inflation indicators to divine, to predict the future. We looked at core indices. That's, inflation less the very seasonal fluctuations such as food prices, energy prices, beverage prices, etc., etc. And then to services, because services, as in any modern economy, is roughly 60 to 70% of the Turkish economy. And we see in all of these indicators, which are, by the way, on a 3-month average, so we can really filter out the seasonality and see the underlying trend, they're all increasing. Let me give you some numbers. Again, I'm rounding up as of August. My apologies. Turkish CPI was roughly 12%. And with these core indicators telling us that it will escalate in the coming months, we could easily see 13, 14% of CPI at the end of the year. Now, of course, inflation rising from 1 to 2% is not a huge deal in terms of consumers' wealth or consumers' purchasing power. But when you have high and chronic inflation, which is also rising, then the impact on consumer behavior and consumer spending is devastating, because people usually draw fixed salaries or wages, but the purchasing power of that wage or monthly salary declines month by month. So they are able to purchase less. Now imagine a situation in a country where the official unemployment rate is 13.5%. In the United States, it's 8.4, for instance, and Europe somewhere around there, I believe. So a lot of people are already having very little disposable income. And on top of that, those who work are suffering under higher inflation. Therefore, unless we bring the inflation problem under control, there is good reason to believe that in the coming months, things are not going to get better. That's one of the reasons. The second reason, here we go, just a second, is that like several developing nations, and currently I believe in Midwest United States, the coronavirus is basically out of the control. Let me show you the process or proceeding of daily new cases in Turkey. This is a 7-day moving average. And if you look towards the right side of the chart, you would see the shape of the curve inclining upwards, which means Turkish cases are rising rapidly, and it's not a one-day deal. Now remember, this is the official case count, which has been widely dismissed by medical authorities. As of Sunday, Turkey reported a smidgen under 1,600 new patients. But if you read the Turkish press, the statements from physicians, the actual cases could be as high as 10,000 per day. And this is very unlikely to get better, simply because people are only now coming back from the vacation spots where the virus had a chance to mingle with the entire population. And unfortunately, like segments of the American and European population, Turks don't like social distancing measures. We're a very kissy kind of society, so don't take on very easily to masks and not to shake hands or kiss someone that you know when you meet them on the street. Furthermore, of course, there is the problem of asymptomatic cases. These are usually young people who are sick, who are able to infect other people, but they show no symptoms. And our tracking measures, unfortunately, don't reach these people, so they act as super spreaders, helping the virus spread even faster. On top of that, there is a common worry for all the countries in the Northern Hemisphere that in a month or two, depending on where you live, whether in the temperate zone or towards the Arctic Circle, the season for flu and other upper respiratory diseases will start. COVID-19 will mingle with these other viruses, and it will become more lethal and much less difficult to control, simply because every country has a certain amount of fixed health service capacity in terms of respiratory units, in terms of nurses, in terms of expert doctors who can deal with these cases, and CAT scan devices to see whether a person is really in a bad shape. I have read a current prediction which says that in September only, new cases could reach 50,000, and Turkey has about 40,000 intensive care units. So you guess the rest. But from an economic perspective, what happens is either the government start locking down risky professions such as barbers, hairdressers, restaurants, outdoor activities, indoor activities, parties, etc., or a segment of the population which is either old or extremely health conscious starts locking themselves up at home, which is a further drag on consumption. I mean, instead of me going out to eat every night, to be perfectly honest with you, I now stay home. Either I order home through Uber Eats or the Turkish equivalent, or actually me and my wife start cooking at home. All of this means that some of the economic activity is transferred to home and a lot of people become unemployed. But there are other problems, and let me show these. One of them, unfortunately, I missed the graphic here, I believe. Just a second. Yeah, unfortunately, I don't have a graphic for that. Turkey is running out of FX reserves. Our central bank's reserves are down to $90 billion, and only $50 billion of that is usable. The rest is either in gold or in swaps, which are not liquid. And Turkey has a lot of foreign debt payments, and because of a bad tourism season, has a current account deficit which could probably rise to $25 billion at the end of the year. So financing this current deficit, as well as a portion of maturing foreign loans, which Turkish companies and banks prefer not to renew, and finally, of course, the exodus of foreign investors in Turkey is going to put a severe strain on the currency. It had already done so. As I said, lira lost something like 20% against the dollar. Now that too has a devastating impact on the economy because the Turkish economy is heavily indebted, in particular the corporates. Corporates earn their revenue in TL, but 65% of their foreign debt is in dollars. So as the lira depreciates against the dollars, against the euro as well, it is becoming very difficult to pay interest on these loans because your Turkish lira revenues buy fewer dollars every month. And same thing goes for the economy. There is a rapid pass-through from currency depreciation to inflation. That's because we're so import dependent. Let me give you a number, a rough number, but a ballpark figure. Every 10% devaluation in Turkish lira adds 2 additional percent on top of the CPI within 3 to 6 months. So already we're seeing this kick from the devaluation into the inflation. And as Turkey fails to attract more foreign currency assets but continues to pay off FX, Turkish economy will suffer more in terms of higher inflation. And of course, since there is no financing, obviously capital investments and imports are going to be more expensive. And finally, there is really no confidence in the future. And in modern economies, that's what it comes down to. If people feel good about their future, even if they don't have sufficient income, they take out loans or they increase their propensity to spend. That's they use up their savings to purchase things. But let's look at how Turks feel about the future. This August Metropole Surveying Agency survey, 63% think their living standards have worsened in the past year. compared to 9% who said, well, we're doing better off. That's a devastating ratio. I mean, almost 6 times of people who think they are worse off. And of course, when people are worse off, they're going to spend less. If the participants in this survey are in this business community, they're not making any money, so they're not going to employ more people or build new factories or buy new tools. Here's another thing to prove my statement that Turks have lost faith in their future, which is, again, from the Metropole survey, 75% of the public think everyone should be worried about the dollar's rise. That's very important because essentially what the participants to this survey are saying is that even if we don't hold any dollar assets or even if we don't have any dollar liabilities, we're extremely concerned about the weakening of the Turkish lira. And when people are concerned, as I've said, they don't consume. So, in August, let me just go back to the first scene to make sure I don't miss anything I want to say. Okay, we're at the end of this broadcast. So at the end of the August, Turkish recovery has petered out. From now on, it's going to be downhill. And the real GDP is likely to shrink anywhere from 3 to 5% this year. CPI at least 13% by year-end 2020. And that's the classic definition of a stagflation. That's negative growth coupled with high and or rising inflation. Over the winter months, things will get worse because we're unable to deal with the COVID-19 outbreak. We don't have sufficient FX reserves to pay out our debt or to use it for growth. And consumer confidence is in the dumps. So not only will we have a very bad winter in health and economic terms, also Turkey's capacity to grow in 2021 is extremely suspect, simply because there won't be a vaccine widely available to the world population until mid-2021, which means, the health crisis is not going to improve. And unless Turkey changes policies and treats foreign investors and creditors more favorably, no more FX is coming to Turkey. This is sort of like bleeding from 1,000 small bites. The leakage of FX doesn't kill you over the day, but it weakens your economy. Therefore, unless these conditions change and we bring inflation under control, say push it down to 5%, which would increase people's spending power, purchasing power, Turkish economy is doomed to stagnation, which is sort of like neither here nor there. It's very low growth with high inflation rate. Roughly speaking, I would be positively surprised if Turkish economy grows 2% in real terms in 2021. And I would be beside myself with joy if Turkish CPI declines below 10%. Thank you very much. That has been another broadcast of Real Turkey channel by Atilla Yeşilada. Okay, this is the Real Turkey channel. This is what I want to show. In addition to our English broadcasts, we have a Turkish news site, paturkey.com, no punctuation marks, where we try to update events in Turkey as well as in emerging markets. We write both about politics, business, and the economy. If you like these broadcasts, you may wish to share them with your friends, and you may want to pay a visit to our new English language website. Most importantly, though, stay healthy and stay safe, and hopefully I'll see you in the next broadcast from a distance. Bye-bye now. This is Atilla Yeşilada.